Good morning, everyone. It's an honor to be on the panel with this remarkable people who are active on the CEE market of debt sales. And I would kindly ask my panelists to introduce themselves in short and state their area of expertise and interest.
I would suggest that ladies start. So.
Hello, everyone. My name is Maja Zgajnar. I'm a partner with global law firm CMS. I head banking and finance department in Slovenia, and I'm looking forward to today's discussions with you.
Hi, I'm Jozef Martinák. I'm CIO and interim CEO in APS Investments. APS is basically a company in distressed debt investing and management in Central Europe and Southeastern Europe. I guess we know APS, so probably not much need to introduce.
I'm Marko Lazarevic. I'm a principal banker at EBRD, an operational leader for EBRD's NPL investment framework. As a bank, we've been quite active in NPL markets in the last 3 years, I would say, even though we had some investments even before that time. And CEE is one of our core markets where we consider a large number of investments over the last 3 years. So I'm really happy to be this panel today and discuss future opportunities and potential of this market.
Hello, good morning. Nice to meet you and to be participant in this interesting discussion. My name is Nedelchev. I'm a senior advisor to NPL Markets. NPL Markets is a new online platform with the idea to become the first really pan-European transaction marketplace for non-performing portfolios. And we are very actively talking to banks, investors, and workout companies, collection companies in the whole of Europe. So this topic today would be of great interest for us, and hopefully I can benefit in the discussion. Thank you.
Hello, everybody. My name is Martin Kammermeier. I'm a partner at 720 Restructuring and Advisory, a Vienna-based expert for distressed assets in Austria and SEE, down to Greece. We are a group of very senior NPL experts with more than 15 years, each of us experience in lending, workout, buying and selling of distressed assets in this region. Our clients and business partners are primarily banks or NPL investors, and we act as an advisor, as a servicer, or also as a co-investor, depending on the situation. Very happy to meet you. Some of you, actually many of you, meet again, and looking forward to this panel very much.
So good morning to everybody. My name is Tomaz. I'm currently employed by Sberbank Europe, based in Vienna. I'm responsible for workout and restructuring department and taking care and steering about the NPL portfolios and distressed portfolios in Southeastern and Central Eastern Europe of Sberbank. So my expertise, let's say more than 10 years on the market, dealing with different type of assets, so different type of transactions. And today I'm participating just to maybe on one hand to hear what are actually in front of us, and of course also to share it with you and with all the rest of the publics. How is our view? How do I see, and what are actually next after COVID vaccination is coming on board?
Thank you very much, everyone. My name is Gergely Szalóki, partner at Schoenherr Budapest, and I'm mainly dealing with banking and finance and with distressed transactions as well. Okay, thank you very much for introducing yourselves. My first question to the panel would be, how do you see the general impact of COVID on debt sales? How did the moratoria that was introduced throughout the region affect your daily business?
Maybe I would go on, since I was the last in the intro session. So how do we see? Actually, it depends on the market to market. Each and every country implemented different tenor, different size of moratoria. So let's say legislative moratoria. On the top, we have also this EBA guideline, which somehow covers also perimeter, knockouts criteria and regulation regarding to the distressed assets. So basically, what we are actually viewing is that new transaction would follow in some kind of steps or sections. Depends on the market, depends on exit of moratoria, depends on the economy structure of each and every country.
Maybe from my side as well. So what we were seeing this year in respect to debt sales is basically that the transactions were continuing. We had a lot of single ticket sales, portfolios coming to the market from the banks, not much pressure on pricing. We think that for upcoming 2 years, probably the first wave will be the NPLs that are still sitting on banks' books. At least regulator in Slovenia is carefully monitoring the NPLs that already on the books. And then after that, we expect that there will be a next wave of NPLs caused by COVID and epidemic. How big that will be, it depends also how long this situation continues, how quickly we will get the vaccination, and if there will be any difficulties with that, but probably this will still take some time. And the longer it takes, probably there will be more NPLs in coming 2 years, at least in our view.
As Maja have touched upon the topic whether a new wave of NPL will come, I would gladly hear whether you think which industry. So if you, so please, then the next one who answers the question, please include also which industry or when do you expect the new wave of NPLs, if you wish so, of course. So please feel free.
If I can take the word, we have a very strong team of people with analytical and practical background in NPLs, in NPL markets. And in March and April this year, we tried to review and a prediction of how NPLs will develop for the whole of Europe as a result of the COVID crisis, taking in consideration several macroeconomic factors like GDP growth, unemployment, and of course the measures, the countermeasures that were taken by governments and central banks. Now we updated recently, just less than a month ago, our prognosis, and it shows that generally for the whole of Europe, we could expect doubling, and actually more than doubling of the amount of NPLs on the bank books, with of course differences from west to east and north to south. The south is countries like Italy, Greece, Croatia are much more dependent on tourism, which is of course the maybe the most hard hit sector after aviation, together with aviation. But we also actually compared our prognosis to the previous highs from 2011, 2012, after the 2008 crisis. And we think that in most of the countries, previous highs will not be reached. The reaction of the governments and of the banks now is different, and we believe that actually we will not see in almost all the countries the levels that we saw 10 years ago in the NPL markets. So in terms of sectors, of course, tourism and transport are where we expect most of the hit to happen. But it will be interesting to see how real estate will develop, because real estate prices are supporting for the moment, and especially in the residential, but sectors like offices and shopping malls are expected to be hit. So we think that it's very difficult to predict what will be the timing of the development of NPL formation. In my personal view, there'll be first a hit from the sectors which I already mentioned, which will come out in the market next year. But then it depends very much how long it will continue this depressed consumer demand. So it can easily spread to sectors like retail, real estate, I already mentioned. So in my view, we should not expect a very quick resolution of the situation, but maybe 3 to 5 years of elevated levels of NPLs.
If I may add, Nedelcho already made a lot of very important points. I believe there will also be differences between the countries depending on the kind of response the authorities and governments took. For example, in Austria, there were a lot of grants available of different kind, helping the companies to avoid losses in the first place. Balance sheets were anyway strong before the crisis, for the most part, at least for the mid-size and bigger companies. That's why the Austrian banks, the people I speak to, they are quite comfortable that their portfolios will hold up pretty well, in fact. And maybe they, of course, in the mentioned sectors, they are also seeing problems arising, or already seeing problems, but not at a really worrying scale. On the other hand, if aid was made available in a refundable form, in form of loans, then it's more pushing the can down the road, and companies will have incurred losses anyhow in the meantime, which depletes the equity and will create pressure to restructure the balance sheets of these companies. And it's the question how this will be done. Will there be equity available? And who will provide it? Will the banks have to take a hit maybe in order to restructure these companies, or will they have to exit some of them from the market? And to me, this is not quite clear yet. Which country will fare better and which one worse? It maybe would be interesting also to exchange views on that.
Yeah, maybe from my side. Basically, I think it's very hard at the moment to predict the levels of NPLs, especially because of the moratoria. There's estimates, I think, of 1.4 billion by IMF, I believe, or European Commission, and the other one is estimating 1.2 billion. So coming up from 500 plus billion of the current levels. So, but I think these are the worst case scenarios. And from my point of view, we're seeing a crisis which is relatively short but very, very deep, obviously. And so it will separate those companies and individuals who are able to restructure and basically go back to business, and those who were struggling even before the crisis or were not very strong before, and those will have to become NPLs essentially. So in terms of timing, it's you basically can think about it the way that it's moratoria plus 90 days for DPD plus some time for workout of these loans by the banks. So normally, I guess second half of the next year, probably we see that pipeline increasing. I would agree with Maja that at the moment it's basically a cleanup of the old book of NPLs. And we actually see a pipeline decreasing these days. The pipeline is not that strong, and the pricing gap is opening up. So the banks are not really sort of adjusting yet, but eventually we think that they will have to adjust. Perhaps also the buyers will have to adjust, and at some point the prices will converge, and then the market will be booming again. But at the moment, I think we're going to see another half a year of sort of not very strong pipeline. In terms of the segments, I mean, I don't think it takes. It's too hard to see that the hospitality, tourism, but I think this will come back. Lots of these businesses will just come back. Office will go through a structural change because the companies just realized that they don't have to have people working from the office. Some of them going for permanent home office, and so yeah, I think there will be a differentiated sort of picture. But yeah, so this is briefly my view.
If I can add just quickly, very similar, I think, to Jozef as well. This seems to be primarily, asset quality crisis in the banking sector. The central banks were quite quick to support banks with liquidity lines, and banks were anyway liquid even before the crisis. So that side of the banking hasn't been impacted much. As we all mentioned, I think the asset quality side is still not really clear. And moratorium was very useful for the banks to avoid the initial shock and to postpone this, a big shock that would happen in the banking sector, so that the banks can still survive and keep lending and rolling over the facilities. But it will probably take some time before we actually know what's happening with the bank's balance sheets. We expect if there is no second wave or double-dip recession beginning of next year, we hope that already by the end of Q1 or the end of the first half, we can at least see what is happening with the bank's balance sheet a bit more clearly, and what is the level of NPLs. Now, I really think there will be a solid lag of those then portfolios coming to the market. Probably less than the previous crisis. With the previous crisis, markets were not really ready, so there was a really significant lag. There was a lag of 2+ years of this, between NPL portfolio formation and the first transaction coming to the market. Hopefully now, with all these developments in the markets, stronger servicing capacity across these markets, more experience of the banks going through NPL sales, we hope they will come to the market quicker, but probably not to a great extent in 2021. We were pleased actually to see that some form of activity resumed very quickly after the initial shock and all transactions being on hold. Quite a few of those, at least, that were started before the crisis came back to the market, and many of them were successfully closed even over the summer or now until the end of this year. What was more surprising, and was also mentioned before, is that the prices have not adjusted significantly. So we haven't seen a huge change in prices. I mean, there was some small adjustment, but not probably as much as you would think if the whole region is going through this massive recession. And this is probably due to a very liquid demand. There is still a lot of demand. Buyers are still quite liquid. They're still looking to place their funds, so that hasn't changed much. And we think that this strong demand will remain in the next year. I think there's still a lot of potential buyers, including EBRD being willing to support the transaction as well with our co-investments. So it's really going to be when the banks are ready, when the bank's balance sheet become a bit clearer, when we see what was the damage, let's say, after the moratoriums, after the attempts of the bank to also do the restructuring on their own. But yeah, the transactions from this new wave, we expect at best end of next year, or probably 2022 actually.
Thank you very much. As you have mentioned the demand for NPLs, I would ask the question, as we have now discussed the supply on the market, but let's turn on the demand, and I would gladly hear the opinion of my panelists. How do you see the investors' appetite in the region? If you could if you could elaborate a bit more on this. Do you see a high demand, and you just see that the supply is not there yet because of the moratoria, because of other factors, or even the investors are a bit waiting for something to happen, or they are reluctant to move? How do you see this?
Maybe if I can just expand a bit on what I already mentioned there. I mean, what we see is the demand is still there. We see a lot of players still waiting for the portfolios to come to the market. We see many of them, especially those that have a solid backing, financial backing from the banks, and they have access to the bank loans, being still quite liquid. We see a lot of distressed funds that are still, have liquidity that needs to be invested. So we do see the demand is still there, and it's probably going to wait for a while. There is a risk of some of the demand in CEE region moving their focus back to Western Europe, because now with this large NPL formation in Western Europe as well, and with still quite compressed returns in Eastern Europe, some of these investors might refocus, especially larger global funds might refocus more on Western Europe. France and even Germany and UK and Italy and Spain, they will all have increase in NPLs and consequently on NPL sales. But there's a lot of regional and local NPL players in Eastern Europe. That was a big change, I think, from the previous crisis. Many of them have a relatively solid financial position and have gone through this crisis, and survived in more or less hard. But we still believe there will be solid demand. So we really think that the transaction are going to resume when the supply side kind of opens up.
If I can make a remark for the supply side, I think that there are three types of banks in the way they are approaching the situation. One type of banks, they're actually trying to look at a case by case. I mean, down to every single larger position to analyze the expected credit loss and to make provisions, or at least to plan for making these provisions. Then the second type are the ones that are doing this at portfolio level, and then the third one who are actually expecting to see the development of the moratoria and the different government and regulatory measures. I think that the ones actually banks and countries where the regulators have pushed the banks and the financial sector that actually prepare earlier will benefit from actually taking more proactive steps and finding the right solutions in the markets, being it outright sales or securitizations or some kind of refinancing for their clients. And I think that this is why maybe countries like Austria, where Martin mentioned that the banks he's talking to are, as far as I'm also talking, are more proactive to realizing or at least identifying the risks now in this year, not waiting for next year. And actually Austrian banks, they have a presence in all the region. I think they will be also the first to start actually looking for solutions next year for downloading these NPLs. And this leading to what we could expect on the demand side. Our talks with investors and collection agencies in the region shows that actually for the moment the activity is somehow subdued. There's a number of banks that have frozen or cancelled for the moment their regular repeating programs. Also, some of the investors they're actually saving, kind of building up capital buffers for next year, with the clear expectation that there'll be more supply and maybe repricing on the offer side. I think that a major problem actually with the pricing will come with the methods to evaluate collateral. For the moment, we are seeing still strong prices in real estate, as I said, but if this is going to change at a certain level, at certain point in time, I think it will be affected in the valuation metrics for investors. So I think that everybody is preparing for the second half of next year actually to start more active deal making, but the demand it will be really defined by first the pricing expectations of the banks, and second, as Marko mentioned, Marko and Jozef mentioned, how much investors will actually allocate for our region. I think that the risk that capital goes back to the more developed markets is here, but there are a lot of new investors and that are realizing that the CEE region has a potential, and there's depth now in the market. So I think that this is not really going to harm the demand side in our region.
Maybe I would just going on and add something. What we observe now, actually, we just what colleagues already said. So starting from Maja, our bank is currently in 2 transactions, but still, let's say, cleaning all this out of the balance sheet. But I would rather say that the demand is quite high. So to be honest, we are quite satisfied with the demand. Majority of the regional investors are participating, and also price expectation on our end. We do see not any big deficiencies or modifications towards the current situation. Why? Just because, like colleague from NPL market platform just said that there's no any price deterioration of the real estate market. And when you put on the market some secured portfolio, currently there's still no, how to say, impact to the price. This is our observation which we have in-house. Secondly, we are also running one project which was already initiated before COVID, let's say, and then stopped and put on hold. It is in Southern Europe and non-EU country. And what do we see? Actually, we see that investors actually approached us even after COVID, when COVID situation started, and actually a bit being stabilized in June. and asked us whether we are in position to go on. And yes, we said yes, and then we somehow find a way how to negotiate the proper price. Yes, in such case, in the middle of Corona and in the high uncertainty of what would be second wave, third wave, whatever, and when we could expect vaccination, we identified, let's say, lower prices initially bidded, but still in the range of our expectation before. So meaning that still even not reflecting total downsizing or impact of the COVID influence, and we are just in closing of this transaction, to be honest. Yeah. So this is on one hand. On the other hand, what do we observe is that looking high liquidity of the funds. So being hunger of new assets, checking, raising funds in US about private equity, private investors. So tons of cash is ready to come on the market. So maybe yes, first they will focus on Western Europe. We also observe this. We have also our entity in Germany. And then for sure there will be next step focusing in Central Eastern and Southeastern Europe, because there are still macroeconomic environments which are quite sufficient with growth. Yeah, let's say. And the third, comparing previous crisis, previous price, let's say, and cleaning, which in majority of the banks lasted longer than expected or compared to the US. Here do we see that it would run faster. It would run faster. We do not expect any big transactions on the market, let's say, before Q3, Q4 next year. Depends on the market, depends on the moratoria scheme, and depends, of course, of the state guarantee scheme provided. But we do expect big restructurings. We do expect big restructuring, and here do we see also investors, so kind of NPL investors or distressed investors participating in kind of facilities, kind of senior facilities, mezzanine facilities, etc., and some other financial instruments, especially on those companies which are international, multi-creditor, having reasonable business model, and but have lack of liquidity. So this is maybe our observation at the moment about the demand.
If I can react on that, I would agree that I think there's going to be more restructurings, more single tickets. And so the demand will have to adjust to the new sort of structure, to the supply. And obviously, yes, the pricing is driven by the real estate, and the real estate market in some segments have been sort of kept going up. I think it will again be very differentiated for different types of assets. So you have to be really careful about the liquid assets, and you know, some of these countries will just have to go through macroeconomic adjustment for some time. And so I think, you know, you really have to think about sort of which type of assets are heading where in terms of the price. And in terms of the demand, again, from the buyer side, obviously some of the funds moving back to Western world, where they will have again more interesting and bigger volume. That's a typical case. Basically, after 2008, there was no liquidity essentially from the Western buyers in the Central Europe. I think there is more now demand, especially on the sort of smaller ticket sizes. But for the bigger ticket sizes, I think there's not that strong demand. Obviously, again, you have to speak about country by country, and it's all driven by, I think it's all driven by the ticket size. Whatever is sort of 50+ million, I think that brings attention of the international buyers, of the bigger international buyers. But whatever is sort of couple million transaction, you mostly have sort of smaller local buyers, and that's where I think the competition is relatively strong. Yeah, so again, I think it's really a matter of the deal sizes, and for the bigger tickets, I see demand actually slowing or decreasing. That's my view.
Maybe quickly from my side as well, I fully agree with all of you. We also see a very high demand. Investors have big appetites in investing, not just portfolios, but we are seeing also investors that we were working with after the last financial crisis coming back, looking for interesting single tickets, especially in hotel business, leisure business, where some of the hotel chains in Slovenia at least have already quite a lot of difficulties. We saw some hesitation in autumn when investors were deciding to invest in loan portfolios backed up by real estate. But even then, these transactions moved forward and they decided to invest in that as well.
Thank you. Martin, do you want to add something, comment on this?
Well, what we experienced in the transactions where we participated, there were some delays in the end, and notably the price expectations have not fully been reached, I think, by some of the buyers, but maybe it was also because they had sort of unrealistic expectations, even though they were advised by a reputable advisor. So maybe in these specific portfolios, it was also that there was a relatively high uncertainties from the legal side, and then in the end, for the investors participating, the overall COVID uncertainty, economic uncertainty, and plus the relatively high risk portfolio, it was not easy to basically sell this portfolio. I'm not even sure if it's closed now in the end. Another portfolio came a bit later, but that seems to go, it came a bit later and was postponed now, but it seems to be on its way. In terms of the investors, it seems to be same names as always in the last couple of years that are inside and still being active, and yeah, but I don't know. I would expect a certain pressure on prices to at least maybe come down a little bit, unless there is really prime assets backing that up. That's what we've been seeing this year, and that's what I would also expect for next year. Of course, stable real estate prices are helping. Generally, the yields that can be expected by real estate investors and by NPL investors, they will probably remain muted. But in terms of price percentage of what you have to pay for a portfolio, I guess this will go down to some degree.
Thank you. You have mentioned many type of businesses sectors that were hit by the COVID pandemic. Do you see in the CEE region any specific restructuring tool that is addressed to these sectors, or generally to the SME sector? And also, I would kindly ask you if you consider one specific restructuring tool worth for mentioning because you consider it extremely effective, then please don't hesitate to share.
So maybe I would start briefly to open this topic. So how do we see special restructuring tool at the moment? Quite a good in some countries, not all, is state guarantee schemes. So this we found out as a quite good for SME, would rather say, since you asked also for SME sector. So in some countries we do see where it's not so bureaucratic and complicated administration process in place, we see quite good and quite efficient tool preventing, maybe in some extent also extend the problems, yeah, but still quite a fast and efficient tool to implement.
I think that this is the main tool for the moment, but I see one major problem with most of the government guarantee schemes, that the new money that are actually lended to borrowers, they can only go under the regulations, they can only go for covering operational expenses, and in some cases for investments. They're also limited to a number of parameters, and one area which is not addressed, I think, is where actually companies need, I mean, especially in the sectors where the activity is zero or very low, that when they have already a high debt burden, they don't have the liquidity actually to serve their principal and interest payments to the banks. And maybe here it will be interesting to see in the coming months and years what type of private investors or other government-supported measures could appear, actually with junior credit or mezzanine instruments to help the companies bridge over this period of couple of years, because actually these are not zombie companies. These are companies which had viable business models maybe 1 year ago, and we are all expecting that in 2 to 3 years time they will be more or less recovered. But here is actually where I see the biggest potential risk, and also maybe an opportunity for investors, even DFIs actually, to look for solutions to bridge this gap between the regulatory requirements, which actually limit the banks how they can restructure such credits after the moratorium, and the government support schemes.
Maybe also from my side, for our market, I think that in time of COVID, it was very helpful for the companies to get liquidity loans provided by the state via state institutions, and also, of course, moratorium. But on the other hand, the first restructuring cases that are coming in and we are seeing for now are debtors carrying a lot of debt from before. And these creditors could not get the access to new liquidity loans. So they have problems with liquidity and already going into restructuring. But going ahead, when this, let's say, temporary situation ends, and there will not be any support from the state anymore, from liquidity loans to moratoriums, we were also started to think of what the legislation provides for new restructuring cases. Because as we know, retail sector was hit hard, tourism, leisure was hit hard. And especially in the retail sector, you always have not just the banks as the bigger creditors, but you also have suppliers, and on the one hand, and also the leaseholders. And at least in Slovenia, we don't have special restructuring tools to facilitate agreement with this type of creditors. And this will definitely be a challenge going ahead, because we are left with out-of-court restructuring, which requires 100% consent. But we have a restructuring possibility for SMEs, which is good because it's quick, simple, and less costly. And that can be used at least when the company becomes insolvent. It's a compulsory settlement arrangement specifically designed for SMEs.
Maybe from my perspective, so I would look at it the way that from the experience historically, restructurings that were successful, most of them were out of court. So if it's out of court, it has a bigger chance of happening, obviously, because there's the will. If it's in court, then most of it is simply, debtor goes insolvent, also for the reasons of protection or potentially, prolonging the process. And essentially, most of these in-court restructurings are just about sort of agreeing what's the plan of disposing of the assets. So, you can call it restructuring, but it's essentially a different name for bankruptcy. So, yeah, I would see it basically this way. Basically,
I think the most important points have been made, that mostly the companies that have had some problems before, I think Maja, you mentioned it, they will have problems getting out of this circle of being in moratorium or having received liquidity loans once the moratorium cannot be prolonged or the liquidity loans expire. And what I also said in my first statement, if these loans were used to cover losses, then it will be also a problem, because it will be very difficult with a deteriorated balance sheet to fit into the lending criteria of the banks. And these are maybe interesting restructuring opportunities for funds that are maybe interested in investing in, not in buying an NPL necessarily, or at least converting it into some equity-like structures, which then puts the company that has actually a viable business model and going concern again back on track, and then allows it to continue working with the banks. I have not really seen this yet in the region. I think Nedelcho, you were also mentioning that you're expecting this, some fund investors to provide mezzanine structures or equity kind of structures in this situation. That this will be very interesting to see how this if this evolves and how it evolves in our region.
I think that it's an interesting topic because actually an interesting question arises: how much of the new NPL formation that will happen this year and next year actually has the potential to recover, and how much will actually go for liquidation? And I mean, maybe unlike not pre-crisis, it will be much higher the percentage of companies which actually had viable business, yeah, albeit with higher indebtedness and higher leverage until the end of last year, but simply because their business was hit so quickly and so hard, they were not able to survive these 2 or 3 years. And then the question is if in again 2 to 3 years the demand for their services, hotels or the consumer demand in retail is back again, as we all expect, whether these companies will become most probably some of them will become NPLs, or they will be actually restructured and they will manage to survive. And this is very important for the banks, for the countries, and of course for the businesses. And I think it opens a whole new interesting area together with investing in LPR portfolios, actually to make this distinction between zombie assets, which the only way forward is liquidation, and companies that have chance to be put back in performing status.
Yeah, maybe just quickly react. I think that historically we haven't seen much of the supply of the restructuring cases to the market, unless this was a sort of big single ticket. And I think this was basically also because the banks were not pushed to do so. And I think this time it may be different, with the regulation changing towards banks recognizing the losses, potential losses early, and the regulation essentially pushing the banks to take charges against, or sort of capital charges for bearing these unlikely to pay loans. I think that this may create potentially some supply, but obviously this requires a new skill set, or a skill set which I don't think many people have in the region. So this is my view.
Yeah, I actually just wanted to echo this. It's the fact that I think that with this crisis, a lot of this defaulted company will be newly defaulted company. A lot of them will be able to survive. There will be a good restructuring cases. It's a matter of how quickly the banks will bring those cases to the market. One of the reasons why there was not many restructuring cases from the previous wave of NPLs is that a lot of them were relatively old NPLs, and most of these companies simply did not survive and were going concern. So, you know, that also required a certain type of servicing which developed in this market. And this was typically not restructuring. As Jozef mentioned, most of these portfolios did not really involve many restructuring cases in those. Now we hope that the banks will recognize this issue earlier, that they will realize that selling potential restructuring cases also gives you much better price when you're selling it. But we see the issue on both servicing and financing side. So, you know, as was mentioned before as well, I think first of all, you have to have restructuring skill on the servicing side of these portfolios, but you also have to have a certain type of financial backing to actually provide the financing for these restructured companies, which has also been lacking or just did not exist, just because, you know, restructuring was not really a dominant type of workhouse before. And in that sense, again, you know, EBRD is also hoping to play an important role and find a way to actually also work on the financing side of this, you know, restructuring investment opportunities going forward. But let's see, I think it still really depends on the banks. The longer they wait with offloading this type of the cases, the higher percentage of those that just go completely bust beyond the point of recovery and keeping them as going concern, you know, the last restructuring will have.
I think the ability to address this will be not uncritical to the recovery path of the entire region, because there will be a lot of companies that have poor balance sheets after this. And if they are not being helped, then either they are at least they will not be able to invest and will not be able to generate growth, or in the worst case they go bust despite the fact of having a actually sustainable business model. And it's the question who will actually foot this bill. As I mentioned, in Austria, there really a lot of money has been actually granted by the state, so which and the Austrian state debt, I think it's going up by 16% this year, which is absolutely not insignificant, but it probably will leave the balance sheet of the industry in a relatively healthy state. Maybe not so much in the small, very small segment, but in this mid-size and bigger segment, yes. And I don't know how this will look in the region, but I think much more has been done in form of moratoria and liquidity loans. And this still leaves up the question who will pay in the end for the losses that have been incurred during this time.
Let me also add one sentence here. How do we observe is actually the difference compared to the previous crisis, the previous bulk of NPLs. We would rather say the banks are better prepared, having their early warning systems implemented, being all those, even zombie or other types of clients early identified, being also very, very pressed from the regulator about clustering, about so clustering assessment, so clustering analysis, especially in retail, transportation, hospitality business, real estate, and to already book provisions now in this time of uncertainty. So meaning that we are not waiting next year or Q4 next year or whatever, but still, and this actually brings the banks in position that they would be able to react faster I would not say that it would be the same in all the countries like in Austria, but because it also depends on the mentality of the clients. But I would say that still we observe that restructuring will be one of the major tools, especially for the clients identified as an ongoing concern, so viable business model, viable industry. For small clients, I already mentioned one of the tools for sure is state guarantee schemes. And the second one is, like Maja mentioned, is court restructurings or pre-insolvency regimes. I would say we have quite a good experience with it. In let's say in Serbian market, in Croatian market with it, majority of the clients applied to, survived, and being able now to serve that fully. So this is, let's say, one of the good tools. I'm talking the biggest restructuring happened 2 years ago in this region, and you know, everybody knows, which I'd like to point to. And yeah, we see quite good tool and successful tool in all of the sectors, not only, let's say, hospitality, but also for other sectors, kind of agriculture, food production, beverages, etc.
Thank you, everyone. As we are running out of time, and as we have touched upon all of the topics we wish to discuss, there is nothing else left than thank you for participating and sharing your interesting and valuable thoughts with us. And I really hope that we will meet in the near future and we can discuss a bit more cheerful topics.
Thank you.
Thank you, being invited.
Thank you.
All the best and stay healthy.
Thank you.
Yo.
Bye-bye.